Hello, I'm Randy Williams, proud member of Keiretsu Forum. I'm also the founder and CEO. We are at Microsoft Mountain View today in November 2016, and this is our 23rd biannual Angel Capital Expo. This particular expo, we had three very esteemed panelists talk about what's it like to fundraise. You know, what empathy can other entrepreneurs draw upon? More importantly, how tough it is out there fundraising. What can they do to be better at their game? So that panel hopefully helps some of the entrepreneurs. We have 600 people today, of which 400 investors, 200 entrepreneurs. So that panel is designed for the entrepreneurs how to fundraise better and more efficiently.
Jim, we're very fortunate to have a great relationship, and thanks to you, we've grown around the world with Microsoft. We use your great facility at Redmond. We also use it up in we use it in Barcelona and many other locations. And you have a new title, Daniel Nguyen, who I've known for a long time. Used to have your title, I believe.
I would love to be associated at that level, but no, unfortunately.
Yeah. So tell us what your title is. Very cool.
Yeah, so my name is Jim Brisimitzis. I'm the head of Microsoft for Startups here in the US. We're a new organization. We have, I have 13 people on my team in 10 metros. We partner, fortunately, with 22 of the best accelerators here in the US, which include Y Combinator, 500 Startups, Techstars, ERA, GCT. So our deal flow into early stage companies coming through these accelerators is quite good, and I'm excited to participate with you all today.
Great. And so we're doing something different today. We're flipping it. Instead of us talking about how to, how do we raise money, we're talking, tell us the flip we're doing. I think it's a very interesting. We're having founders talk about what it takes to fundraise, what's going on in the market today, and what else.
So I have the chance to, last year, my team and I had the opportunity to meet with 700 startups from across the US. And oftentimes, the capital raise is the most hardest part of building a company. And so what I've done is I've invited two of my founder friends, Renato and Chris. I've also invited a colleague of mine who used to be at Microsoft but is now at Sierra Ventures, Michael, to give a perspective of what it's like for a founder and what they're looking for in an investor. I think it's time to turn the table and for you all to get a perspective on what they care about, what they learn.
Good. So we have 20 minutes and we'll allot some time for questions, but total of 25 minutes because we have a structure. Jim knows about this. And Renato is one of our portfolio companies, and then you have two of your companies. Let's rock and roll.
Let's rock and roll. So I'd like to invite up Chris, Michael, and Renato. So first is Chris Nguyen. Chris is the co-founder and CEO of a company called LogDNA. We got to meet Chris and learn a lot about what his company is working on through Y Combinator. We've also done some co-development with Chris and Chris's firm. Michael Nathan is from Sierra Ventures. He's the Vice President of Business Development. I've had a chance to work with Michael for the last 3 years when he was at Microsoft, heading up our account relations with Dropbox, eBay, and PayPal.
And Intuit.
I've done many sales calls with Michael, and Intuit, many sales calls with Michael. Now he's the Vice President of Business Development at Sierra Ventures and still a dear friend. And then Renato, who is from Bowtie, which is well known in this community as well. He's the founder and CEO of that. And Renato is a very accomplished CEO. This is not your first turn at the crank when it comes to startups.
That is not. That's correct. This is my third rodeo.
Absolutely. All right. Okay, so one of the questions that I love to ask founders quite a bit is, and you're all very successful and somewhat accomplished individuals, you could do really well in corporate America with this pretty stable paycheck. Why a startup? Why?
Goes first. I guess for me, it's just the challenge. I love, my passion is taking an idea, executing, launching, and scaling. And I was never worried about money. I grew up really poor, but I was never worried about money. I think seeing what my parents went through, like refugee immigrants to Canada, it's, you know what, anything that was hard. Running a startup's not hard, or launching a startup. Yeah. How they came to Canada was hard. Yeah. So I think like we're given an opportunity to do cool things, and it's not just cool e-commerce stuff. It's like cool, epic, make an impact, and that's why I yearn the most about launching a business. And I've done it 3 times in 3 different industries, and I just love learning. And I think, especially being in the Valley, plan B, plan C is to work for Facebook. Or any big company. So I always have that safety net, right. But your time is your most valuable asset. Do awesome things, and you're here for a reason. So that's how I look at it.
Renato, perspective?
Entrepreneurs are a very unusual breed of people. They used to, and they work, 100 hours a day, not just to work, or like a week, not to work for 40 hours for someone else. And having that opportunity to change something really rapidly and fast without cutting to red tape and going through all this approvals if you work in a bigger company, it's really awesome. but also seeing your team glowing and achieving something on a daily basis. It's what you usually get lost in a big company. I used to work for companies that are 30, 40,000 people before in my previous life, and I hated it. And I was very happy when I entered into this life.
Yep, I think that's a perspective that's shared by most, so thank you for that. Michael, I had a question about what you're seeing at Sierra. And if you go way back to when the VCs really established themselves, there's a lot of work that VCs are now doing, or fundraisers are now doing quite a bit beyond just cutting checks. So tell me what your role is at Sierra and what you've seen play out there with your portfolio companies.
Yeah. So at Sierra, I have 3 core areas of responsibility. One is to build out and build the core relationship and rapport with debt lenders, banks, and legal entities for representation of our portfolio companies from a deal flow perspective. 2 is to manage and orchestrate our CIO, CXO forum and board. And that forum is an annual event. We just had it on the 2nd of November, where we invite 200 plus of the CIOs from Fortune Global 2000 companies. And they get a chance to hear from industry experts, subject matter experts on topics of interest like autonomous car, machine learning, AI, digital health. And then the third component is to be on point from a BD perspective to our 26 current portfolio companies. And that includes tapping into my network, building rapport and relationships with that portfolio to shorten the cycle. And to Chris's point, time is the most precious thing any one of us have. Once you give it, you never get it back. And once you do give it, the hope is that it's time well spent. And so we take that mentality in mind when we build these relationships. So.
Got it.
So we're seeing, to Chris's point and to Renato's point, people spending hundreds of hours to work for themselves, not 40 hours a week to work for someone else. And that passion is infectious. So we look at a few things. We look at the individual and the team, and we look at the marketplace where that company has an interest in entering.
Right.
And then we look back at our own company and see, do we have expertise in those core areas? For us, AR, VR, cloud and security, mobile and IT core infrastructure. That's where we typically and traditionally invest in.
Okay, so building on that comment, for a question for Renato and yourself, Chris, what do you look for in an investor beyond the check? What are the qualities, what are the attributes of the investor or their team that you look for when you evaluate whether you want to partner with them or not?
But before that, I would like to say that you should build and raise friendships, not investors. That's, I think, the first thing. Because if you do fail, and you fail because the market was not right, you can go back to those people, look them in the eyes, right? If you don't do that, you're just not a good person. That's number one. Number two, what you look then beyond that is that person who has the check connected and can scale your company? Can he invite you to some other companies? Can he do the intros? Can you leverage that person's name as network, which is great. And some of the people who invested in us became great advisors, and they gave us, without them, we would not scale to the phase we scaled in this 2 years. So very important. And do spend time with those people. It's time exhausting, but you have to.
Mm-hmm. Yeah.
That's
For
my
me,
take.
having come from Y Combinator, there was a lot of capital that we had options to. And I was looking for more smart capital. And to me, smart capital was, do you understand my industry? Do you like the team? Because it's going to be a marathon, not a race. And what access to a network could we tap into? And most importantly, when LogDNA was a pivot from original idea, and it was a fundamental change from where we're going to. And the first people who I called were my investors, who I built a great relationship with. And everyone said, we believed in you guys. You'll figure it out. And it was great to have that voice of reason in my corner. And I use them as a voice of reason. If I'm thinking of a strategy idea, a BD idea, I run it by them because they've been through the trenches. Right. And I respect it. And I love that they were founders at one point in time. So they know that highs are highs and the lows are lows. And I like having a go-to. They're like my mentors, a lot of them.
So you both hit a point that is something that I see quite a bit about. And that is, oftentimes when a founder or a founder's team is working on something so new, so real, so different, it's often very challenging to get an investor to see the point of view. And there's the infamous 2008 story of Airbnb that approached 7 investors and got turned down before that 8th actually made the investment, and all the 7 Others are probably kicking themselves for not doing it. What is your perspective, guys, on new markets, new product, new way of doing something, new way to disrupt? How are you able to convince? What's your perspective on trying to share that vision with investors?
For me, being Canadian. There's a quote with Wayne Gretzky.
Yeah.
He goes,
Oh,
I
Wayne
don't
Gretzky.
skate to where the puck's been, I skate to where the puck's going. Right. So when we're talking to investors, the biggest problem I had to tell them was like, here's a challenge today. Can you understand that? Can you relate to that? And here's where we want to go, and here's where the puck's gonna be. And I had to tell them, like, what if I'm right? Right now I don't have that. I'm building this Megatron platform, but if I was right, do you think that I would win? And what would change in the world if my small team of 7 was correct? And a lot of them took a step back and like, wait a second, if that's how it is today, this is potentially huge, right? And it's conveying that message. You had to be really resilient. So my last round, I had 20 investors. I probably talked to 100 investors, and not everyone saw it, but not everyone saw the industry I was in with DevOps. But you just have to be resilient. And if you really believe in it, which I really do, and have a great team, is just keep moving forward, because someone else is going to believe in that vision.
Okay.
For me, I had a mentor who told me that you should learn art of storytelling. People do remember stories. They don't remember slides or videos. It goes all the way back when we were in a tribe, sitting around the fire and people saying stories to each other. You would remember the story. So how do you paint a picture? So teach yourself how to paint a picture, and then present to investors that you have a team who can, execute that picture, and then show them the results really fast. Because if you blabber too much, you don't have a product, then you're going to fail really flat in your face really fast. But to explain to people something intangible into tangible format, you need to learn the way how to tell them a story, show them what the future is, show them what the market is, and show them, famous story always good.
Okay.
Can you hear me okay? Everybody?
Sure. Yeah. Good.
Thank you. Thank you, Randy. So in essence, everybody, a very famous storyteller always starts like, imagine if. You try to spark the imagination. And a lot of, 90% of the people will not have that imagination. That's why you need to hit, like Chris says, many doors, kiss many frogs, until you find your princess or a prince.
Great analogy. So let's actually dive in a little deeper on that one point. And I'm going to turn the tables on you guys and have you give advice to the folks here who are here today that are going to be watching companies pitch themselves. What advice would you give an investor who's evaluating an early stage entity looking to go disrupt or build new markets or what have you? What advice in all of your experience would you give an investor to think about and ponder as they're evaluating opportunities?
I think believe in the team. I think ideas will always evolve. Some of the best companies have come from evolutions of the original idea. Take a step back, look at the team, and it's like, is this a team that I'd want to hang out with? I want to have a relationship with, and know that are they resilient enough to go through the tough times? Because I meet a lot of entrepreneurs who have a great idea and they want to grow a business, and all I tell them is, great, now execute.
Yep.
And do they have the chops to do that?
Yeah, I would say very similar to Chris, really believe in yourself and what you're doing, why you're doing it, and have an understanding of the market space that you're playing in. And passion is one of the things that we pick up on. We look at the team and we look at the space. So if your team is cohesive, is collaborative, and if there's a clarity on why you're doing what you're doing, as it relates back to time spent, that's what we try to thrive off of and invest in.
Okay.
If the question was, advice to investors, it's like, your cup of tea. If you're your cup of tea, then invest. If not, pass it on early. Don't drag around. Don't waste my time. Don't waste your time. Advice to startups and founders, just know your pitch, make it perfect, and know who doors you're knocking on. I mean, knocked on 275 doors in the last 2 years. A lot of them told me in the early beginning, hey, dude, you need to have 20 million before you knock on Sequoia doors. I was like, oh, I didn't know. I came from Europe. I don't know who you guys are. So I didn't, until I met Randy. So long story short, the advice would be, know your story, tell the story. But for investors, your cup of tea. And if it's not your cup of tea, just pass it on. That's it.
Okay. So, Michael, I'll ask you a question. When I'm assuming it's obvious that Sierra gets a lot of deal flow, a lot of incoming deal flow, various stages of companies, very early and more mature. How do the Sierra partners evaluate something like an Airbnb, something that's so new and so different. And the reason why I'm honing in on this is I think at various tranches in the investment scale, there's different ways to look at problem statements. And I would love to have this forum understand how you guys think about it.
Yeah, so we have 3 core managing directors. One has expertise in AR, VR, one in cloud and security, and one in IT core architecture. And if there is a company that comes into pitches that falls outside of that realm, then we look at it from a disruption standpoint. And do we believe that this space is going to be disrupted? Does it have the opportunity to be disrupted? And if so, how long has it been since it was disrupted? And is that startup the one that we believe can do it, along with the team? So we use Joy as an example. You know, Joy is a wedding app today that has AI on the back end that powers it. And that was interesting to us. So a consumer play is not a traditional area of investment for us, but we took a chance. We fell in love with the team, their passion, and their product was incredible. So we invested in, and that came through a partnership with you.
Yeah.
Right? So to your point, building relationships truly goes a long ways.
Right. Great. So this is where I asked the panelists if they had questions to ask of their fellow panelists. We would do this. I have no idea how this is going to play out. I'm hoping it's going to go well. So who wants to take the first stab at it?
I'll ask Michael something. How important is traction when you see like early stage companies? Or is it the team and the potential opportunities is more important?
Traction is important. It's like your logo sheet. You know, who are your prospects? Who are your current customers? And if you don't have traction, it's important to be able to address it.
Cool.
Yeah.
Can I have a question for Chris?
Sure.
Okay. If you would have the knowledge that you have now, and if you have to do it all over again like 2 years ago,
Yeah.
what would you do different?
My gut was right with the pivot. We prolonged it 6 months. I should have done it 6 months earlier. And we both, from a co-founder perspective, we both had the same gut intuition, but we tried to stick with it a little bit. And after getting some advice, we said, you know, let's bite the bullet. Let's see what happens. And we were on the verge of dying. So when you have 3 months of capital left in the bank, you do some creative things. And it actually worked out. We did Hail Mary pass. We threw the ball, we threw it long, someone caught it, and we said, you know, let's run with this. And I think coming from those moments, we told ourselves never again, when we had that gut feeling, let's go on the whim and let's execute on that idea.
That's a great answer.
Yeah.
So I think we have time for one question in the audience. Yep.
Fred Cohen, Renzo Salinas, Monterey, Pebble Beach chapter.
Thank you. So a lot of startups that we encounter don't come for money until it's almost too late, or in some cases it is too late. I'm sort of wondering about the perspective of the people that have been successful in these startups. I've talked to many people that say that they go for money when they don't need it, and that's the best time to go. Can you tell us what your perspective on this is?
I just had a board meeting yesterday, and they said, okay, round is oversubscribed. Do we take the money or not? Yes, take the money. You never know what's going to happen around the corner. Maybe your product is going to not work right that well, or who knows what can happen. So yes, you should always plan a good 12 to 18 months ahead, and not go like, oh, I have 3 months cash in account, which in your case worked really well because it put you to the limit to do something unusual. But 9 out of 10 companies fail doing that. So yeah, think in advance, like know your numbers, just know your math one-on-one, and plan with somebody who's a smarter advisor to advise you what to do and when to do it.
All right, so before we end, I wanted to thank my panelists for joining me today. They're all very busy folks, and so thank you guys for spending some time with us today.
Thank you so much.
Thank you.
Thanks, Jim.
Thank you so much for watching. Hope you tune in for segment 2.